Okay, uh, this is Jimmy over at Banking Bridge. Thanks for joining. We had a little bit of a change with the guest could not make it, so we wanted to continue to talk about trigger leads because it is a hot topic for discussion, and we're going to share kind of our perspective on some of the current regulations that are out there, some of those proposals to the best of our knowledge that are out there, and generally just talk about the advantages, disadvantages of using trigger leads for acquiring lead opportunities for your mortgage team. Cody's joining me here. If you have any questions, you feel free to put those in chat, and then Cody will read those out as we move through the webinar. So, going to share our deck here, and again, talking trigger leads today, some trends, some changes, a little bit of lead conversion for the topic here, and quick overview of what Banking Bridge does. We work with 100 plus mortgage lenders. Really, our goal is to create a little bit more transparency in the mortgage shopping experience. So if you're looking to get live rates on your website, if you're looking to have more of a shopping experience comparing rates on your site, that's where Banking Bridge can help. And really, we focus on lead generation, and we focus on specifically generating leads on your actual website and not from third parties. But we do host monthly webinars to bring in ideas about leads, to bring in ideas, new trends, maybe some new topics, maybe some new lead providers, just to keep everybody up to date with what's happening out there. So again, this month we're going to talk about trigger leads, and really, wanting to better understand what is what is a trigger lead, what happens, and how does it actually happen. And I think, as most people on this call probably know, it's an activity on a consumer's credit file. Maybe they're applying for a new mortgage, refinance, a home purchase, and that can, what they call, trigger an opportunity for lenders that subscribe with one of the three credit reporting agencies to receive that consumer's information. And to the best of our understanding is you have the ability to only receive certain information about that consumer's credit profile, and it only goes to the subscribed lenders that are participating with that one of those three credit reporting agencies, or it could be a third party that works with one of those three credit reporting agencies, where you can subscribe to be one of the lenders that calls. What we all hear about trigger leads is that it is a highly competitive market. It can be a little bit annoying on the consumer side, and we'll go into some of that as well. And the lenders can contact the proposed consumer via calls, emails, text, direct mail, and but they are required to send that firm credit offer. And I think my biggest takeaway is learning more about trigger leads as we kind of researched this topic was it's relatively complicated, and it seems to be highly regulated, and we're an industry that is highly regulated. So keep that in mind as you go through and you're thinking about, well, where can I get leads from? This trigger lead space seems to be one, a hot topic, but two, it's very highly regulated. FTC. The idea around trigger leads was the consumer, because they get a lot of different options. That was the benefit behind the being able to roll out the trigger leads. So, Cody, are there any questions so far?
No, not yet.
Good to go. Okay, yeah, feel free to throw any questions that you have specifically in chat. But the overall goal when trigger leads came out was to bring more competition into the mortgage shopping experience, the home buying experience, so that the consumer can get quotes from many different lenders and not just one. So the spirit, if you think about it, the spirit of the idea of a trigger lead is good. I think it seems like it's into something different, but the overall idea of it seemed to be good. So we have current regulations, and then you have these new proposed regulations that came out last year, and we're going to talk a little bit about what's current. So lots of regulations around trigger leads. You have the Fair Credit Reporting Act. The goal again is that use that credit information for promotional offers, but you also have to keep in mind of the privacy and the rights of the consumer have to be protected. So there's that balancing act, and I think that's kind of where we're going into with these changes. Is those lines could be getting a little bit blurred. So, but the FCRA does limit how much information, from what we understand, that the credit bureaus can share with the lenders that subscribe to this service. And again, you have enforcement by the FTC, you have enforcement by the CFPB, excuse me. And a lot of it is, it's up to the lender to be ethical and responsible. So when they're working these trigger leads, you have to keep that in mind, and allowing for responsible credit information. So you've got some tight regulations that you have to fall under as a lender, and these are the current requirements under that current regulation, which is how a trigger lead is handled today. So no changes from what we understand have happened. One is you have to meet these criteria. This is just 5. I'm sure there's many more, but these seem to be the top 5. Is you have to have that firm offer credit. So if you contact the lead with whatever credit that you're extending to them, you have to be able to live up to that offer. So obviously you can't do bait and switch, but you do have to have a genuine extension of credit, clear and concise disclosures. So based on the information that you have received from the credit agencies, you're able to give them a clear disclosure about what's available, and the consumer has the right to prohibit the use of being marketed to in the future. So you have to have that sent to them as well, and then you have opt-out provisions where simple and easy ways for the consumers to opt out when you contact them. Usually that's a toll-free number, or it's a website URL where they can unsubscribe or opt out from your future marketing. That's definitely a need there. And then your pre-screen criteria is you can't just batch send everything from my understanding, you can't just send everything to the lender. There has to be a pre-established criteria, and that is what feeds over to the participating lender. And I believe you have to, if you're picking up those leads, you have to market to them consistently there as well. And consumer and consent, it's not a direct requirement, which means, from what we understand, is the consumer may not know that you're going to reach out to them. That's not a direct requirement, but they must have provided consent for credit information to be shared. So what that means is from what we understand, is the 3 credit agencies should have provided the consent to have that information shared with the lender that's subscribing to that service. So that's the current requirements. If you're participating today, there's probably more. There's probably people on this call that know a little bit more about trigger leads than maybe what we do. So you can feel free to share any questions and comments that you have in chat. And some proposed changes. So what's currently, from what we understand, what's currently in the works, or is part of a bill, is to change the way that lenders can participate with trigger leads. So from what we can gather, it's really to end trigger leads. Sounds like it's to end trigger leads pretty much altogether. So not being able to, solely based on such requirements, such as furnishing a credit report. So you can't contact a consumer that is inquiring with another mortgage lender about a mortgage. So they're going to try to completely eliminate. It seems like they're going to eliminate that. Obviously, there are some forces out there that are pushing for some different changes. And if you have any questions about these proposed changes, feel free to add those here in the chat as well. So, as a mortgage lender, based on what we have today, before these proposed changes, is, well, if you are participating in Trigger Leads or you want to, how are you going to maximize your ROI on the spend to acquire those consumers? Really, it's you have to have a team. From what we're hearing from our lenders, is you really have to have a team that's worked Trigger Leads before. They understand what it is. You have to have these in place. So you have to make that firm offer of credit, which means you have to be mailing, phone, emailing these consumers with a firm offer of credit. That's a requirement. You typically need to have agents or loan officers with direct consumer experience. They know how to pick up the phone. They know how to reach out to that type of consumer. And it does help to have an automated process. Maybe that's an auto dialer. Maybe that's automation through SMS, automation through your CRM. So definitely having those in place will help. Diligence for reaching that. Sometimes the first isn't always the best. And sometimes it's consistency. Sometimes it's the ways that you reach the consumer. Maybe it's something unique, a way that you can reach them, or a message that you provide to them. And then obviously over engagement. You hear that a lot with Trigger Leads, where they're inundated with phone calls. Nobody wants that experience. And I think it's that the over engagement is just as detrimental as no engagement or very, very minimal engagement. And I think from just sales 101, putting on your salesman hat, is, being a consultant versus a transaction. So most of these people are probably early in the process. They just had their credit pulled. It's more of a consultant sale at that point, education sale. So making sure that the team that's working these leads understand that it's less of a transaction, and spam calls don't get answered. So the more you call doesn't mean the higher chances that you're going to talk to the person. And branded caller ID sets you apart. So if you have the ability to brand the name that's coming through, that's obviously a positive there as well. So kind of a short webinar. My key takeaways from the lenders that we work with is Trigger Leads are a hot topic, and there seems to be a lot of regulation around it. It seems to be something that could be changing. If I was a mortgage lender and I had some money to spend, I probably would want to find some different avenues, rate tables, some other lead sources out there that are probably a little bit more less stringent or they're going to change completely and pull the rug out from you. It's a little bit more consistent with some other different types of lead profiles. So Cody, any questions there?
Yeah, Brian Lardner had a question that maybe you could share a little insight with. He said, could someone please explain to me how a broker like myself can honestly extend an offer of credit to anyone? We're all at the mercy of the wholesale lenders, and we have very little information, he said.
Good question. Brian, I don't have the answer to that. I can send you some information. I'll email you after the call with some information that might help you with that. Well, thanks. Short webinar this month. Had some changes at the last minute. Wanted to cover Trigger Leads. If you have any specific questions, feel free. You can reach out to myself, Jimmy, at bankingbridge.com. We'll have our March webinar. We'll bring in a guest, talk about something lead conversion. A great topic there. And thank you for joining. And we'll talk to you next month.